Hey everyone, Coach Investor back to another video for you today. So let's talk about Alibaba. I'm purely making this video to talk about a potential short-term trade. I know Alibaba is a very popular stock despite the China risk and despite the, extreme underperformance of this stock. But currently, if you look at the valuation, if you look at the movement in stock prices, you can see here on the chart, the movement has been very minimal actually since the start of the year. The movement has been just going down. But even after two earnings report in 2023, the stock hasn't really moved much. We can see a clear resistance here above the $115 to $120. Right now we are sitting in between the 20 and the 50-day moving average, still a long way to go towards that 200-day moving average. When you look at the RSI, pretty neutral there. MACD still bearish. Now all of this happens when the overall market, every other big cap company, has seen some positive momentum. Stock like Alibaba hasn't seen positive momentum, since late October until the beginning of January. Since then, it's been going down and down. Could there be something that will move the needle? We have CPI report this week, we have Fed meeting this week, so a lot can happen, positive or negative. But a company like Alibaba shouldn't trade at current valuations. If you look at the numbers right here, currently 10.1 times forward PE, has a market cap of just under $220 billion. Now, if you look at price to free cash flow in the last 12 months, trades at 9.3 times, right? Because they had free cash flow, we can actually see this, of just under $25 billion for the year. Now, if they want, with this amount of free cash flow every year, 10% buyback each year. Now, they already do some buybacks, which they showed us right here. Last quarter, they reported $1.9 billion of repurchase. They still have $19.4 billion remaining under the current authorization effective through March 2025. Now, since they have $25 billion of free cash flow each year, at least in the last 12 months, what's to say they can't continue with this approximately 10% buyback each and every year? Of course, 10%, if the stock goes up, becomes a bit less. If the stock goes down, becomes a bit more. But share buybacks are one of the ways how your shares become more valuable and how share price actually increases. Let me show you. If you look at this slide here from Monish Pabrai, the magic of buybacks. Share bought back on the left, 50%. What happens if that happens? Well, return without a change in earnings or PE multiple, basically the shares 2x. If you look at 80% share buybacks, you get a 5x return, and then of course the rest is a bit of a magical number because it rarely happens. But throughout a long period of time, yes, you could have 50% or even more of shares being bought back by a company. And again, if you look at the valuation metrics, if you look at price to earnings, price to free cash flow, gross profit, EV to EBITDA, etc., we're seeing here numbers that would indicate that Alibaba is not growing anymore, is not becoming more profitable, and the end is near. Well, that couldn't be further from the truth, as we've seen in the earnings report. Link will be in the top right corner. Now, you have share buybacks, which can increase your returns as a shareholder, but you also have the company that keeps on executing. So you have both sides that can play a positive role in you holding the shares, especially talking about Alibaba here at current valuation at a market cap of $219 billion. I'll say it again and again, if this was a US company, the stock would be worth much more than it is today. Now, of course, there's still more catalysts to come. As you know, they will have a spin-off of multiple businesses. So last quarter, they say here, we are taking concrete steps towards unlocking value from our businesses and are pleased to announce that our board has approved a full spin-off of the Cloud Intelligence Group via a stock dividend distribution to shareholders with intention for it to become an independent publicly listed company. Now, unfortunately, during the earnings call, a lot of analysts have asked questions, especially those from the West, and we didn't really get a clear answer as to how this will be done. Hopefully, maybe we'll get more answers in the future. Now, they also say here that they are delighted to share that their board has approved the process to start external financing for Alibaba International Digital Commerce Business Group, exploration of IPO for China, which is the logistics business, and execution of IPO for Freshippo. Now, this is also going to be extremely bullish for the company because then the market will basically put value on their different businesses, which again should increase the value of your shares. It also depends on what the dynamics are of what they call here a stock dividend distribution. Remains to be seen how that happens. But these types of spin-offs are good because it shows the real value of the multiple businesses that a group like Alibaba has. Now, if you're enjoying this type of videos, please leave it a thumbs up, subscribe if you have not, we would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, with all the positive points mentioned already in this video, of course, there are some risks attached to that as well. One of the major risks is the US and China tensions, but some other risk applies to the business specifically, and specifically when it comes to competition. We've talked about one major competitor out there, Pinduoduo, Temu, one of their products that they're offering. Because if you look at their latest earnings report for Alibaba, China Commerce, you can see a decrease still year over year here. Of course, the economy is still reopening, still some rebound, etc., etc. But if you compare to the numbers we've seen with Pinduoduo or maybe even JD, we can see that this segment is still behind. Now, of course, if you look at international commerce, that segment has been growing quite nicely year over year. All the rest here, if you look at local consumer services, 17% year over year growth, China 18% growth year over year. Cloud has decreased 2%, which is also an extremely important part of their business. We're also going to get a complete spin-off from that. But of course, you would like to see cloud increase. The huge players, Azure, AWS, Google Cloud, of course, that's the top three. They are still growing. Why isn't Alibaba's cloud business growing? One of the answers could probably be, well, because it is a Chinese company. Some countries, some big companies in the West might not want to work with them. But overall, we can see that the underlying profitability of each and every business segment is improving. On the top here, you can see what happened in 2023. On the bottom here, you can see what happened in 2022. And if you look at adjusted EBITDA margin, you can see a clear difference here. 2022 was way worse than in 2023. And that's why you suddenly see this shift in free cash flow as well. And of course, we can't talk about a big tech company without talking about AI and large language models. And so here was a report on Reuters. Chinese organizations launched 79 AI large language models since 2020. So apparently in 2020, Chinese organizations released 2 LLMs compared with 11 in the United States. But in 2021, there was a total of 30 LLMs released in each country. US organizations in total released 37 LLMs the following year to China's 28. So far this year, China is in the lead with 19 LLMs to the US 18th. Now, judging from the distribution of LLMs released around the world, China and the United States lead by a big margin, accounting for more than 80% of the global total. Are you surprised? I'm not. The report analyzed the 79 LLMs developed in China, noting that while there were already 14 provinces and regions where such technology was developed, joint development projects between academia and industry were insufficient. And last thing here, Alibaba will build ChatGPT-like AI into meeting and messaging apps. So the company is adding its latest AI to the popular DingTalk Messenger and Tongji Tingwu documents and summarized audio and video calls. So Alibaba is integrating its most advanced artificial intelligence system into its Slack-like DingTalk messaging app and a meeting assistant named Tingwu. So to conclude, you have a lot of positives, you have some negatives as well. Risk reward here, in my opinion, there is more rewards than there is risk currently at the price $86. Let's say we go back to the resistance point, which is around $110. That's a 31% upside. Now, analysts' price targets are way higher than this. They are seeing approximately 60% upside to the price we are at today. Now, of course, you know what I think about price targets from analysts. They just go with the flow. Remains to be seen what happens, but to me, for a trade right now, I think the reward is much bigger than what the risk is. Of course, I could be wrong. I'd love to hear your thoughts down in the comments below. You hold some Alibaba, you're planning on buying? Let me know down in the comments. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.